From the morning reading, more new record highs as the diamonds, spiders, and IWM make new all-time closing highs. The XLK moved from sideways to up on a new high and a second day closing above the 4-month channel. XLP moved from down to sideways with a close above the November 29th resistance high. Watching XLRE for potential test of Thursday's breakout. Breadth weakened compared to the prior session as decliners led 1484 to 1531 on the New York Stock Exchange and advancers led 1624 to 1156 on the Nasdaq. On the S&P 500 snapshot, the weekend review up 3.08%. The S&P 500 posted gains each day of the week with a solid 0.58% and 0.59% advances on Monday and Friday. Lesser gains of 0.34, 0.22 on Tuesday and Thursday, and a strong surge of 1.32% at midweek. The week-over-week tally is an impressive 3.08%. This was the third largest weekly gain of 2016. The presidential election rally began on November the 7th, the Monday before the actual vote, with a 2.22% rally. The rally thus far consists of 17 gains in the past 24 sessions for a total gain of 8.36%. Will the rally continue with the assistance of strong consumer sentiment and seasonal crescendo into Santa's sleigh bell? Stay tuned. A sell-off of treasuries continued today with the yield in the 10-year note closing at 2.47%, up 7 basis points from its previous close. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:23 a.m. Mountain Time, and I'm recording this in preparation for the market day of December the 12th, 2016. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. Okay, let's go ahead and dive into the morning report. And at the time of the cut, there wasn't anything terribly significant. S&P futures and Russell futures were down just below scratch. NASDAQ futures were down a bit more, about 1/3%, and Dow futures were just above scratch. Crude oil, huge move though, 4.35% increase. Euro up about just under 0.5%. Bonds down just more than 0.5%, and gold is down about 0.5%. In overseas action, there's definitely been some activity. China down about 2.5%. Hong Kong down at about 1.5%. Japan going the other way though, up over 0.75%. Europe's a bit weak with Germany down just below scratch and the United Kingdom down about 0.25%. In terms of macroeconomic reports for today in the United States of note, there are none. In terms of looking forward to tomorrow, for the United States of note, we have import prices, and that's about it. So pretty quiet on the macroeconomic report for Monday and Tuesday for the United States on anything that's expected to be a market mover. In terms of current volatility conditions, short-term VIX an 11.10, skew benign. IV percentiles are about as low as we have seen this year. The S&P is a 3, the Russell a 14, the Nasdaq a 4, and the Dow a 6. We did have standard deviation size moves put in on a close-to-close basis on 2 markets on Friday, with the Nasdaq and the Dow both putting in positive 1 standard deviation size moves. In terms of the current charts, let's go ahead and go to the S&P futures. And of course, you can see this just explosive rally that we've had. And one of the morning authors mentioned that we're up some 8.4% since the Monday before the rally. And frankly, that's not even including this futures market where we dipped in the early hours of that overnight election night. Really, if you come back from here, we went from 2028 to now trading. Last night we hit 2264. So this continues to just be an explosive move. And really, if anything, while this was big, the move since the retest of support has been parabolic. The last week's move, some 3% up for a week is a huge move for a broad-based index like the S&P. And you can't say that there was some sort of giant GDP or some sort of, really important U.S. macro report that came in. It's just we definitely have had the energy. There's a lot of people feeling like they've been left behind, and they're planning to play catch up. And there's probably also a fair number of people who shorted and thought that this was just going to degrade back and everybody's going to come back down to reality. Well, those shorts got ran over in a big way last week. The S&P was strong. The Dow was stronger and has also set a new 52-week and all-time high in the overnight session. And it's up over 19,800 now and is closing on 20,000. I did see a headline from one of the major financial newspapers over the weekend going Dow 20,000, which normally is scary. Just about the time the financial media catches up and calls it as, the big bulls are out, that usually is the capitulation point. But anyhow, right now, the Dow is extremely strong and is even parabolic in recent days. NASDAQ, of course, has been less so, but in last night's session did tickle the previous area of resistance. So we have definitely tested that. We've backed off just a little bit. We'll see what happens when the cash participants come into the market and we get decisions from all the market participants. But we have had improvement on a number of the FANG stocks. You see Apple here still in the cloud, but certainly on the way up with higher highs and higher lows of the short-term trend, and greatly improved. Here we have Google, and Google also greatly improved, just about to come to the cloud line. Facebook's probably the weakest of them all and has failed to have a higher high as of yet. Right now, it has similar lows and lower highs and is basically forming a triangle. And let's take a look at Netflix. Oh, let's see. There we go. Netflix also has improved in the short term after having some weakness in the post-election period. So, and it's certainly of the four is the most strongly bullish. It's been above the cloud the entire time. So of the FANG stocks, we have improvement on all four, and that certainly is helping the NASDAQ. They weigh so much in the NASDAQ. It's very hard for the NASDAQ to make any significant ground forward without the participation of those four big components. In terms of the Russell, of course, the Russell just absolutely is on fire. You saw the old channel here. We've been talking about that for some long time, but look at the most recent channel here. I mean, look at the angle on this most recent channel. That cannot continue. And what we'll be looking for as an initial kind of retracement into a more normal path is a break of this diagonal on the lower part of the channel, and it won't take much of a pullback to break that channel as steep as that angle is. In other markets, let's take a look at crude oil. Look at this. Crude oil has broken above its 52-week high with last night's action, gotten as high as 54.51, and is still holding on to an awful lot of those gains. So a clear breakout by crude oil in the overnight session up above this significant area of resistance that goes back to last June. And then gold has been breaking down, and indeed we've had new lower lows. We've been expecting that gold would continue to the downside, and we continue to break into lower lows and lower highs on a consistent basis on gold. And I would not get in front of that move trying to go long until you see some sort of significant retracement, reversal candlestick pattern, followed by confirmation. Same thing here with bonds. Do not get in front of this trying to go long until you see really strong confirmation patterns. And of course, bonds was probably on the generational big unwind and anticipation of another rate increase in just a few days. So that would be a very dangerous thing to do, is to get long on bonds. Now, as to whether you actually want to jump on and get short at this point, that's an entirely different decision, perhaps using some sort of swing entry with a minimal risk profile to try to join to the downside, but certainly would not get long on bonds or on gold at this point. You take a look at the dollar. Of course, the dollar has been jumping up. It's backed away a little bit last night, but we've come back up against these 52-week highs. So we're right up against the resistance area and playing with that area. I suspect at some point that that will move through. And let's take a look at volatility. And you see volatility continues to play in the very low bull market range, currently playing at just above 12. And we have last week toyed into the 11 handle, which actually is getting somewhat problematic for those that like to option income trade, as your premiums are getting pretty low compared to the amount of risk that you're taking on. So, but bottom line, the primary thing we look at from this chart at this point of our review is where is volatility with respect to the market. And right now we're in that bull market, and this is mostly just considered noise. Anything from 12 to 15 is just considered noise and normal bull market activity, and until we prove otherwise. Okay, that should be enough on the charts. Let's go ahead and go to the daily report. And we've had a few changes here. We continue to have strengthening come in. We are still market phase 4, price patterns near resistance or extension patterns. So that's quite bullish. We also, in the 3 market timing signals, the first from IBD, confirmed uptrend, bullish. GMI index, a perfect 6 out of 6 and 8 out of 8. That buy signal has been in place since 11:10, also bullish. And then stock charts, decision point scoreboard, some significant improvements here between last week's improvement on the short term and now Friday's improvement on the intermediate term. We have universal bullish signals on the short term, and 7 of the 8 signals now on the intermediate term have turned bullish. So in order to get that perfect stack that we like to see for normal bull markets, we just got a handful in the long term and this one in the NASDAQ in the intermediate term that are still on the bearish posture. So things have dramatically improved here and continue to strengthen with confirmation of this bull market moving out of the range and away and setting up some higher highs and higher lows. The position sizing opinions, as you would expect, both of them are at 100%. Intermediate term market posture about as strong as it can be. 97.6%, 98.3%, 98.3% on 3 of the 4 indices. The NASDAQ, of course, has been the relative weaker, but it's also in the severely strong bull camp at this point. This is all backed up, but now a severely strong bullish sentiment line. So we would definitely expect that any retracements would be relatively mild and short-lived compared to the bull legs in this kind of market environment with the probabilities. So until this trend breaks, until this breaks down, we would expect that the bulls will be very much in control. Hedge warning status remains 0+. We're waiting for those last remaining decision point stock charts, bearish arrows to turn away to go to a 0, but that's certainly, we're as close to being a hedge risk level 0 as we have been in a very, very long time. So these conditions, while we still have some elevated conditions, they're starting to be quite minimal. In terms of the strategy opinions, no changes from last week. VIX is in the acceptable range. There is kind of perhaps almost an asterisk to this. We're about to get below the acceptable range to initiate new positions, in that the premiums that are paid to you to take on a position when the VIX drops below 12 start to be somewhat problematic. So kind of keep that in mind and keep an eye on that this week. Cover calls and put selling. Conditions are absolutely acceptable. We've been parabolic though, so you've got to feel like there's going to be some sort of retracement sometime soon, though the expectation would be a relatively mild one. But in terms of initiating new positions, you're probably going to get a better chance to enter if you have a little bit of patience on many of your charts. So overall, relatively conservative here, still 1-to-1 ratio, low beta, high beta. I thought this might go to a 2-to-1, but in studying the situation over the weekend, you have to take in account that we're parabolic right now. So not the easiest place to be going long when you're this stretch. So we're very, very strongly bullish at this point, but at the same time, that doesn't mean that every day is the time to go in. There, even in strong bull markets, are opportunities to wait for at least some pullback. In terms of specific warnings, you can see the volatility ratio warning has reset back to a ready to fire status. That VIX has been below 12. Kind of keep that in mind. We mentioned that a few moments ago. And the distribution day count on the NASDAQ is still high, though much improved. It is now down to a 6. If that drops below a 5, that will drop out of warning status. In the trend area, everything is very strongly bullish. There are no warnings whatsoever. Intermarket risk aversion indicators, we still have 3 of the 5 as risk off, though these are pretty tightly wound around each other on the 3 risk offs and could flip back to risk on at any time. So I probably want to call this area more neutral than a strong risk off or strong risk on any of those 5 indicators. In terms of sentiment, we're a bit extreme, as you might expect, on both stocks, short-term and intermediate term. The fear and greed index, look at this, an 87, so just about as high as it gets. We rarely see readings in the 90s. So this is definitely getting to the extreme side. So what does that tell us? Not to expect a reversal in terms of it's imminent, but simply to say that we're watching for reversal patterns. So watch those candlestick reversal patterns, combinations, for signs of that pullback. But we can remain extreme for prolonged periods of time during strong bullish market conditions. So just because we're extreme doesn't mean you start putting on those bear calls and so forth. In terms of the sectors, you can see pretty strong breadth all the way across on Friday. Consumer staples, healthcare, utilities. So look at this. This is mostly the defensive sectors are doing very well. So a little bit of rebound. We've talked in recent sessions where some of these sectors that had been hurt in current rotations, we're going to start to rebalance and come back. And the same thing on the other side. You look here, financials, who's been the superdog hero of the last 4 weeks, just barely had a positive day. So they're not necessarily going negative, but both sides are just starting to kind of come back to earth and rebalance a little bit after a really incredible 1-month period since the election was completed. And you see market postures, with the exception of healthcare, they're all green now. So again, in rising markets, everything tends to be green. It's just a matter of relative degrees. And we certainly are starting to see more and more signs of these really strong markets flowing through all sectors, all industry groups to various degrees. You're also starting to see more consistency across the time frames, 1 day, 5 day, 1 month, 3 month, and then even into the year to date and 1 year. There's not a lot of red here. You see where we had the big rotation, utilities, healthcare, consumer staples on this 3-month time frame into the 1 month. That's where the damage was done in the relatively short term, but you see they've started to rebound of late. So again, watch the sector rotations for your opportunities and your watch list development, but also understand that just because something was weak doesn't mean that it stays weak, and we're starting to see this come back together. Okay, in terms of the relative rotation graph, really the three heroes here are the regional banks, transports, and retail of late. So those might be some areas to spend a little bit more time with your watch list development. And then also note those that are starting to fall a little bit, still in the right-hand side, but starting to fall out of this upper right quadrant. The FDN, the Internet Index, biotech, and semiconductors are all, experiencing some weakening as a group. So I think that's enough for today. Let's go ahead and wrap this thing up. I'm going to scroll through these. We're at 20 minutes, so I'm going to move pretty quick. If you see something that you want more information on, just hit the pause button, go to that hyperlink, and that will get you all set up. Disclaimers, as always, hit the pause button if you need more time to review the disclaimers. Also note the hyperlink down here at the bottom of the slide for the full set of disclosures. We'll see you back here tomorrow morning for the Falcon Global Market Preview. In the meantime, manage that risk profile, and then, of course, also seek each and every day to learn something about your trade craft, become a better trader and investor. Good trading.